He served as President Obama's chief economic advisor, and before that was Treasury Secretary under Bill Clinton. Larry, welcome.
Good to be with you, Eric.
I'd say global influencer, not Washington.
That's true.
True global citizen.
Larry, what's going on in the economy and the markets? A hideous first quarter GDP number, a terrible March jobs report. We'll see what April looked like, but the ADP read yesterday wasn't all that great. And yet, we have had a sell-off in the Treasury market. The 10-year yield has gone from 185 all the way up to 221.
I'm not going to predict the job market. Who knows what that number? Who knows what that number will be? Look, markets swing, and they often swing too far, and that may be a bit the story of what happened. In a way, I think what's
you mean the backup in Treasury?
I think what's more notable than the 185 to 222 move is that over the last year and a quarter, Treasury yields are way down, not way up. That everyone expected, almost everyone expected at the beginning of 2014 that with the economy recovering, that you'd see Treasury yields back way up, and they're still way below where they were at that time. And I think that's because of a dawning and growing awareness in the market of the idea that I and others have been pushing for some time, that we may have a chronic excess of savings over investment in the economy, the phenomenon known as secular stagnation, that with that chronic excess of saving over investment, we're going to tend to have deflationary pressure. We're going to tend to have, on a global basis, pressure downwards on yields. We're going to have very low real rates, and it's going to be a bit of a challenge to maintain the momentum of economic activity. And I think that's what we're seeing, that yes, we can enjoy reasonable growth, and yes, we can enjoy reasonable interest rates, but it's very difficult to enjoy both of them at the same time.
And what are you most worried about right now? You brought up secular stagnation 16 months ago, and we're one of the few people who said a bond rally is coming. So today, what's got you concerned?
I'm concerned that growth is not going to pick up. I'm concerned that we've seen a moderate amount of growth in the United States over the last 5 years, but it's all been cyclical. It's all come with the decline in the unemployment rate. And I'm worried that the underlying structural growth rate in the United States is really going to be very low going forward. Some of that's due to lack of demand. Some of that's due to issues on the supply side. And I'm worried that part of what we have to do, and the part that's not getting discussed centrally in the political debate, is that we are not going to succeed as a country unless we get the underlying growth rate of our economy up by a significant margin.
So would you say then that if you're right and the underlying structural conditions are such that we're going to be in a low growth period for a while yet, that the folks like Mike Novogratz, who was here yesterday, and others who are calling the beginning of the bear market in bonds are probably wrong?
You know, I'm not going to make trading recommendations for you. I don't think the days of normal being a 4% interest rate are going to return any time in the foreseeable future. I don't think the economy has the underlying strength to maintain a basic momentum of growth at a 2% real rate plus a 2% inflation rate. And I think the increasing awareness of that in markets is going to act as a restraint that keeps medium and long-term yields low. I also think there's a danger, a quite significant danger, that people will confuse the one-off adjustment where an economy gets competitive and stronger because of, for example, a weaker euro, with underlying growth. And I think the supposition that we're out of the woods in Europe is not a warranted supposition.
How about China? What do you think about China right now?
I think they've got a very, very difficult set of challenges. They have proven themselves highly competent so often in the past that you can't write off the prospect of success. But normal is mean reversion in growth rates, and that would mean a very substantial slowdown for them. Normal is that it is very difficult to fight simultaneously financial bubbles and credit-induced slowdowns, because what you do to reduce the credit-induced slowdown can exacerbate the bubble and vice versa. And you're seeing growing signs of froth in their equity markets, even as you're seeing incipient signs of slowdown. You're seeing them move towards the exhaustion of the easy growth that comes from moving from rural areas to more productive urban areas. So I think they have a very serious set of challenges ahead of them, and that what we have seen again and again is that when debt-fueled growth ends, whether it's in the United States in 2007, whether it's in Japan in 1989, or whether it's in, or perhaps whether it's in China today, it rarely ends gently.
Larry, if I was running for president, I would want to have you by my side. To understand the global economy would seem to be so important. What do you make of the criticism against Hillary Clinton that maybe she's too close to you or too close to Wall Street?
Oh, look, I'll let Mrs. Clinton speak for herself. I've known her for 20 years. I have enormous admiration for her. I certainly don't have any formal role or expect having any formal role at all with respect to her campaign. And I certainly think she needs to be listening, given the novelty of the problems we face, to a whole range of new voices and new perspectives, because I think the constellation of economic challenges that we face right now is really quite different than the constellation we faced in the past. It's too little demand rather than too little supply. It's deflation as well as inflation. It's centrally got to do with inequality, something that is also rooted in our politics. We've got a quite different constellation, and we all need the benefit of all the thinking that we can possibly get.
Larry, we could spend all morning talking to you, but I know you've got to go. Thank you so much for spending some time with us.
Good to be with you.
Such an honor.
Larry Summers, he is the former Treasury Secretary, former Chief Economic Advisor to President Obama.